May profits be upon you. Taking a second look at gold before the market opens, and I think we are in for some bearishness. I think we're gonna see a pullback. Look, let me show you what I'm talking about. You see this consolidation. All right, this has been happening since 2020, right? Moving sideways. Did not take the high. We made that high here. Then we pushed down. All right, made a new low, and then we sweep the highs. Okay. Now, this is where I want you to pay attention here. All right. You can see how price wicked past the previous high. All right. Making new all time highs. Right. And then the next candle opens, pushes down, then up, and then we squeeze down again. All right. There are plenty of sellers still here. Right. But you see how the candle closed. It closed within the range of the previous candle, even though it took the high. It made a new high and then came down. All right, we didn't take that low though. I'm thinking you got to think with next candle theory, right? That if the price takes the high of the previous candle, but closes within the range of that previous candle, then the next candle will probably see continuation of that momentum, that the very the most recent momentum, which is bearish, right? And this is what it produced the next month. Okay, all right, now again, understand that I'm looking at price as being fractal, and that what you see happening on the higher time frames, you'll see happening on the lower time frames. The principle, the theory still holds. All right, now you see how price closed here as a doji, just indecisive. It's hard to tell if it's going to open up long or take the high or take the low. It's very difficult to see. So you have to watch the lower prices, the lower time frame prices, price action, so you can get uh, some kind of uh, uh, you can get an idea of which way price is going. But you see how price closed? It closed bearish, all right. Opened bearish, and then popped up higher, took the high, all right. Closed above that high, so now we have a candle that is closing. Not only did it take the previous high, but it closed above the previous candle range. This this allows me to think the next candle will be uh, able to take the high at the very least. It may close bullish, but it will at least take the high of the previous candle. All right. So, because we have upward momentum. Now, this is July's candle. Okay. And you can see what happened in August. Price opened, was bearish. All right. Killed any semblance, any thought of a bullish fair value gap, leaving a bullish fair value gap. Totally closed past that invalidation range, which is the previous the, the, the the month before, not the month before, 2 months before, that high, the high of that range. All right, if price was to close above it, I mean, it was the range only came down here, then we would have a bullish fair value gap. That means we would have bullish structure, which would support higher prices. That's not what we got. It invalidated that with this long shadow or wick. All right. And you see how price pushed up. We took that high. All right. That's important. We took that high, but where did price close? If we take a closer look here, you'll see that price closed below the previous candle range. Right. So what am I thinking? At this point, I'm thinking that price already swept liquidity, already swept the buy side liquidity, and that in the following month, this new month, it'll probably be bearish. We'll probably be heading towards the low of the previous candle range. Okay, so this will be my new draw on liquidity, as we've already taken the buy side liquidity from this candle already, from these highs. I'm thinking that because of the way it closed back within the range, and it's really technical here that it's technically below those ranges. All right, I'm looking for price to quite possibly leave or push higher. All right, to leave a wick, and then it'll flip back. It'll flip. It'll start white, and then it'll flip black, and it'll flip bearish. All right. Now I'm going to go to the weekly. The weekly is showing already. Look at this candle. All right, 3 weeks ago. All right, a lot of momentum, a lot of bullishness, and we traded through the highs. That means for me that this is a bearish market. It's confirming a bearish market. Even if we see a pullback, I would look at it, instead of looking at it as a retrace. I mean a reversal. I'll be looking at that as a retracement. And what do we get the very next week? We got this long stem doji candle, and it's kind of, again, uh, indecisive. But what it's telling is the following week we did not take that high. We did not take that high. Price is stalling here from going high. So that's what I'm looking at. I'm making note of that. That price not only gapped down. You see the opening, right? The opening of this candle was bullish, and then it flipped from white to black to bearish. Even though it pulled back a little bit, all right, last week, because Friday was a bullish day. Uh, uh, am I remembering that right? Was Friday bullish? We'll find out in a minute. But it did pull back, all right, towards the end of the week, and uh, it pulled back up, but to form this doji candle. But what happens is this is an inside bar, all right, after a rally, at the top of a rally, and I'm inclined, of course, because price closed within the range of the previous candle, all right, and it closed bearish. I'm thinking that that momentum will carry over into the following week, and that price will open up, uh, with a possible bullish push, but then it'll flip again back from white to black to a bearish candle, and take that low, all right, and sweep that low on the way to the low of the previous week. So I'm looking for price to take the previous weekly low, and set and set forth to try and get down to the monthly target down here. I do. Now there is a lot of bullish fair value gaps in this wick here, so I am definitely taking that in account, to you can under consideration. So what I want you to see here is this. You see how we've been traveling sideways. You can see that price pushed higher, made an all-time high, right? Came down lower, swept these lows into this area of fair value, or otherwise known as a order block. All right, we tapped it, and it did what it was supposed to do. It pushed price higher. This is the bullish part of this is the bullish structure point from which we can expect prices to move higher. They did. However, it did not make a new high. All right. This, for me, is a swing failure. It failed to make a new swing high. And price pushed down, took this day, this was Wednesday. It took the previous day's low, that took the Tuesday low. All right. Made a new low for the week. And then Thursday, what happened? What? Why is this candle bullish? Well, it closed within the range of the previous candle. All right, this Wednesday candle closed within the range of Tuesday's candle, even though it took the high. Closed. So what does that mean? All right, we don't have bearish. We lost our bearish momentum. What we had some bullish momentum. It carried over into the next day. Right. Price pushed higher, did not take the high, did not take the low. We have an inside bar. All right. Uh, what are we expecting the very next day? Well, easy enough. Uh, uh, Price showed that when it opened, look at the close, look at the open. It gapped down. It gapped down. All right. Price pushed higher, and then came down, took the low, and then closed below the low, below the previous candle range. All right. This is Thursday's candle range, and we closed below it. I'm expecting price to carry over. All right, and open higher. It opened bullishly. I'm looking for price to open bullishly, and then turn black, and from white to black, and take this low, make a new low. All right, and carry on to this swing low here. This is my immediate draw on liquidity. I know I sounded a little jumbled, whatever, but I'm hoping that you were able to keep up with it. But yeah, I hope you understand my logic. This is just next candle theory, and hopefully we'll see that price will come on down here. Let me use this. What am I using? Yeah, what am I using? All right, I'm looking for price to come on down here, and I want to see if it's making brand new bearish fair value gaps. And if so, if we see that, we can see price move up into that fair value gap in order to go lower. Okay, this is it. All right, I'm looking for that to be hit sometime during the week. All right, but my immediate target will be, of course, this one. All right, and this will be the secondary target. All right. If you if you like what I did here, if you like the video, leave a like, but ask me a question or leave a comment. If you disagree with my thinking on this, I would love to hear what you got to say about it. All right, so I can check it out. Okay. I did mention, it's something I did not mention. If we go back to the weekly, I'm sorry. If we go back to the weekly, I want you to understand that we did create a bullish fair value gap here. You can see it here and here. All right. I'm looking for price. This is on the weekly now. I'm looking for price to end up down here. And because we broken structure and we traded through the high over here, because we traded through this high, all right, creating a bullish break of market structure, I'm looking for price to pull back and then go higher. All right. There's potential for price to go higher from this weekly fair value gap. It's unmitigated, untouched, and it's right below this low where I'm looking for that draw on liquidity. All right, this is where the sell side uh, liquidity is, and I'm looking for price to come down here and quite possibly give us a good reaction. Now, again, I'm looking for the formation of bearish um, fair value gaps along the way. So we'll see how this develops. Again, if you like the video, leave a like, and I will see you in the next one. May profits be upon you.